Hi fellow traders, I'm going to share my um, analysis on USD CHF. Right now we are on weekly time frame and I'm trying to show you that Fibonacci extension 61.8% is significant enough to make price react from that level. So if we look at this bigger picture on USD CHF on weekly time frame, this is A, B, C and D 61.8% extension, and price has really reacted from here and price has gone up. If price doesn't fall from this point and if this closes around this area, maybe around 97.20, or if it closes above the opening of the week, the opening was 96.45, then it will make a very good bullish hammer candle pattern on weekly time frame. Hammers on weekly time frame are really significant and they really cause significant price action. If we look at the previous hammer, like you can see a hammer here, you can see a dozy kind of candle here, and then price followed to the upside. Similar kind of price action is expected here. And if we look at previous behavior of USD CHF, USD CHF did not accelerate directly to 100% extension without showing significant reaction at Fibonacci 61.8% extension of any swing. For example, let's take this swing A, B, C and D to the upside. So if we insert expansion tool here from this point A, one second. All right, so this is last time this was the ABCD to the upside and price has clearly reacted from the 61.8% and had fallen down, continued to the upside, but it always made some reaction at that level. Again, some reaction was there at 61.8%. right here, you can see from here reaction, again from here reaction. Price penetrated and it was supposed to go to the next level 100%, but it didn't go and it fell down. The point I'm trying to make is reaction at Fibonacci 61.8% extension, which took place at the very first time price hit this 61.8% extension. After this A, B, C and D. Let's go back and see if price behaved same even in the past or not. So we will look at this candle, this swing from this point A, B, C and D. We're looking at very bigger picture to understand whether we'll get a reaction this time or not. So here I'm plotting the same extension. Okay, this was an exceptional movement where price kept dropping and there was no reaction at 61.8% extension, but there was no formation of any significant candle pattern or on daily time frame. So price kept moving to the downside. There was no reaction at this 61.8%. This was an exceptional swing that can be explained on daily time frame. So let's remember this day. This was something between 28th January 2018 and 21st January 2018. So let's go to the daily time frame. What had happened? We'll go back 20 January 2018. Okay, so this was the CD and the price had kept falling down. There was no reaction here. This is how it looks on daily time frame. But you can clearly see that price didn't make any significant candle pattern at 61.8%. But this time story is different. Price has already made a candle pattern on daily time frame. So if we look at the recent development, this is the current situation, and these three candles are looking like morning star, bearish candle, dozy kind of candle, or you can say a small hammer with smaller body. The tail is almost like 3 times bigger than this body, so this is a valid morning doji star, or morning star can be the name of this pattern made of these three candles. And the closing of the price must take place above the midpoint of this candle, this bearish candle. So if we try to determine the midpoint, let me find the midpoint from this to this. So midpoint is this one, 50. Just a sec. All right. Okay. So right now price is at the midpoint. We will expand a little to make it clear. So this is the 50 level, and price is right now 1 pip above this 50. It should close around this 50. Then it will be a valid and a morning doji star kind of pattern. So this is the one thing which is making this story different from what happened in January 2018. There was no candle pattern. Here we have a bullish candle pattern. Now time is 3:11 p.m. New York time. Market is about to close in 1 hour and 49 minutes, and if it closes around this 50, I mean the mid of this candle, then definitely this will be a morning star. Second thing can be seen on weekly time frame itself, that is bullish divergence. If we compare the low made by this MACD and the low made by the price, then we can clearly see that there is a divergence. It is pointing to the upside, whereas it is pointing to the downside. And if price doesn't fall from here and this weekly candle doesn't close something below this previous low, this low, or maybe around this low, then this MACD is not going to fall from here. As long as this line will stay above this line, then if we connect this previous low and recent low, this will be pointing to the upside, whereas this will be pointing to the downside, and this divergence will prevail. So we have only one day, that is the tomorrow, and then this candle, weekly candle, will be closed, and it will probably make a hammer pattern. So these two things, the probable divergence and morning star formation on daily time frame, is making the situation different from previous situation. So what happened here from like A, B, C, and very fast movement to the downside with no reaction at 61.8% is not going to happen again. And if we look at any other ABCD, we will exclude this price movement. This was caused by a very significant decision taken by Swiss National Bank about the relation of Swiss franc rate with other banks, mainly with Europe ECB. So that was a completely different thing. This was not the normal price action. Normal price action can be seen from here, like from this point, and if you look at like this reaction, if you look at this A, B, C, D, so there was always a reaction at 61.8% extension. For example, even if we plot right here from this point, $61.8 reaction, fell down, again went up, again fell down, and then 100%, then further movement. So there is always reaction, whether we take smaller price movement or we take bigger price movement, there is always a reaction at 61.8% extension. So let's delete this and come back to 1 hour time from now for finding out entry price, because I have already told what is there on weekly and daily. So there is nothing to speak about on weekly and daily. Now we have to discuss about the precise entry to determine our risk and reward. So here is how I'm going to enter. I was looking at the price behavior today of CHF in correlation with Japanese yen and euro. Euro and CHF are directly proportional unless CHF acts as a safe haven currency. Today CHF has been acting in direct relation to euro, unlike Japanese yen. But CHF many times act like safe haven currency, and it is more correlated to JPY, because if you look at the bigger movement which I had discussed in previous analysis of USD CHF, that price kept falling from this area to this area, along with the fall in USD JPY, because this was the move caused by the US-China trade war. And when I had made a video for this harmonic movement, like this one, and this one, and this one, and we were in the buy position, then we had later entered the sell position. Both the positions were winning positions, but back then I had discussed that the price may fall, and it can make a bigger, like A, B, C, and D to the downside. One recent analysis didn't work when there was a bullish engulfing and price completely raised it. So sometimes, yes, it happens. No, not all the analysis is going to work. Nevertheless, we have a great accuracy of around 70%, and our risk reward is always better than 1:1, so we always end up making profit. So the point I'm trying to make here is, we have to understand the behavior of Swiss franc before we jump into the trade. If CHF is going to work like safe haven, and if there is any environment which is causing CHF or JPY to work as to act as safe haven, then we should not consider trading CHF in correlation with what is happening on Euro USD. Euro USD is falling today, USD CHF is rising today, and today USD CHF is working just like Euro USD. Not like the USD JPY, because if you look at the JPY, USD JPY had fallen down today. Very nice fall had happened. See, fall, very minor reaction to the upside, and then again fall. So as long as this environment is going to continue, Euro USD and USD CHF will be trading similarly. Euro USD will be falling, USD CHF will be rising. And I was trying to understand the price action here. How to eliminate retracement from the reversal is the big task when you are going to enter a position against the recent trend. Recent trend is down. We are looking for buy entry. So definitely we are against the recent trend, and we are just trying to make few pips on the possible upward retracement, because longer term picture is still downtrend. Therefore we have to be very careful. So when price started reacting from here, it was a very nice movement to the upside, 2 big candles retracement, continuation to the upside, but slower movement, many candles, and then faster downward continuation. So there was a probability that the price would only price made like A, B, C, D retracement and would fall down. So when I saw this reaction and this reaction, and then even bigger this reaction, look at this big bearish candle, I was not intending to buy USD CHF. I was thinking that price may, this is the enough retracement, price may fall down and may even break the previous low. Therefore I stayed. But now this bigger bullish candle is giving us the bullish picture. And now if we look at the entire movement from this to this point, we can understand, we can correlate this bullish move. This is bigger bullish move, this is bigger bullish move, and these are smaller downward retracement. And overall picture on 1 hour time frame is giving us a faster upward speed. If we look at the number of candles from this point to this point, we have 23 candles which made this 89 pips to the upside, and it had taken 30 candles to fall 89 pips. So from this point to this point, the speed to the downside is slower than the speed to the upside. So that is giving me confidence to enter buy. Second thing is a head and shoulder look-alike pattern. This can be left shoulder, this is head, and this is right shoulder, and this is very harmonic. If we measure the distance, there are 22 candles in left side, and now there are from here again 22 candle in the right side. So this is very nice looking head and shoulder, and this head and shoulder will have the neckline right here. Classical target of head and shoulder will be equal to the distance between neckline and the head. So this is actually inverted head and shoulders, 88 pips, and we go 88 pips to the upside. This will become around here, slightly below the 50% level. This 50% level is 50% of this whole move down from this point to this point. So the target of head and shoulder will be slightly below this 50%, but this 50% can still be hit because this is significant resistance zone, and it is coinciding with the previous swing low. Previous swing low is a natural resistance zone, then this 50% and the target of head and shoulder. So either we can go for target of head and shoulder, or we can target this 50%. So that is how we are going to trade this USD CHF to the long side, and price is already retracing to the downside. Take your position right at the top of this candle. The top of this candle is 97.063, because this is the previous swing high in this swings, like this upswing, second upswing, third upswing. So price probably will fall to this area, and this is also coinciding with 30% retracement against this whole move up. So this area is where price may react. So I am going to enter my buy position right here, and our risk reward will be something from this to this point is just 62 pips risk, and reward is 127. Even if you exit slightly before, by just considering the target of head and shoulder, then still you will have 118 pips. So our reward is almost double of the risk. So this is going to be a very nice trade, and we have enough days before release of non-farm payroll, so we probably will already exit, we'll be able to already exit our position. So that's all about USD CHF, guys. Thank you for watching.